We're going to review the freeandclear.com biweekly mortgage refinance calculator, which is a mortgage calculator that allows you to determine if it makes sense for you to refinance your biweekly mortgage by comparing your existing mortgage to a new mortgage. Our biweekly refinance calculator enables you to evaluate how refinancing changes your mortgage payment and total interest expense over the life of the mortgage. To find the biweekly mortgage refinance calculator, simply click on the Mortgage Calculator tab on the top left of any page on freeandclear.com, and that'll take you to a page that lists all the calculators available on Free and Clear. The biweekly refinance calculator is located under Mortgage Refinance Calculators on the right side of the page. If you click on the triangle to the right of the calculator title, it reveals a brief description of the calculator. I'm going to click on the calculator title, which will take us to the calculator page. As you can see from the way the page is laid out, the inputs to the calculator are on the left side of the page, and the outputs to the calculator are on the right side of the page. The inputs are the information that you provide or select, and the outputs are provided by the calculator after you click the Calculate button. I'm going to walk through the inputs and outputs one by one. It's important to highlight that if you ever have a question about an input, simply hover your cursor over the icon to the left of any input rectangle, and it reveals a brief description of the input and the information required. The first input is the original amount of your existing mortgage. So if you obtained a $300,000 mortgage to buy your home, you would input $300,000, and that's the figure I'm going to use for this example. The next input is the interest rate for your existing mortgage. This is your current interest rate, and if you do not know this information, you can either find it on your monthly mortgage statement or by contacting your lender. I'm going to use 5% for our interest rate in this example. The next input is the term of your existing mortgage, or the length in years of your current mortgage. Please note that with the biweekly mortgage, you pay off your mortgage prior to the stated scheduled term. So for example, a 30-year biweekly mortgage is actually paid off in year 26. If you click on the drop-down menu, it reveals a range of options from 10 years to 50 years, and I'm going to select 30 years. The next input is our current biweekly mortgage payment. Based upon our inputs, our biweekly mortgage payment is $805. This is your current biweekly payment, the payment you make every 2 weeks. The next input is current mortgage balance. You have probably paid down some of the principal amount of your mortgage, and this is your current loan balance. Your current balance may be on your monthly mortgage statement, or you can contact your lender for this information. In this case, I'm going to say that our mortgage balance is $250,000, so we have paid off $50,000 of our original mortgage amount. The next input is the amount of our new mortgage, so the size of mortgage you're getting when you refinance. I'm going to use $300,000 in this example, which is the original amount of our existing mortgage. The next input is the interest rate for your new mortgage. If you hover your cursor over the icon to the left of the drop-down menu, it shows the current interest rate for a 30-year fixed-rate mortgage. In this case, the current interest rate is approximately 4.250%. The interest rate for a biweekly mortgage is generally based on the interest rate for a 30-year mortgage. If you click on the drop-down menu, it reveals a wide range of interest rate options, and I'm going to select 4.250%. The next input is the term of your new mortgage. In some cases, when you refinance your mortgage, you may change the term of your mortgage. For example, you may go from having a 30-year mortgage to a 15-year mortgage. I'm going to keep our mortgage term constant in this example and select 30 years. The next input is non-recurring closing costs, or the one-time upfront closing costs such as lender costs, title insurance, escrow, and appraisal fees you pay when you refinance your mortgage. The lender should provide an estimate of closing costs when they provide a refinancing proposal. I'm going to use $3,000 in this example. The last input is recurring closing costs, or the ongoing costs that you are required to pay a portion of at the time of closing, such as partial interest expense from the day your refinance closes until the end of the month in which it closes, and potentially prorated property tax and homeowners insurance. Again, the lender should provide an estimate of closing costs when they provide a refinancing proposal. I'm going to use $1,000 in this example. These last two outputs give you a sense of the total closing costs required when you refinance your mortgage, although you may be able to include the amount of these costs in your new mortgage. We have submitted all of our inputs. I'm going to click on the Calculate button, which will produce our outputs. The first output is our current biweekly mortgage payment, which is taken directly from the inputs. The next output is the total interest expense over the life of our existing mortgage. So this is how much interest we will pay the lender if we make the scheduled mortgage payments on our existing loan. The next output is our new biweekly mortgage payment based on the inputs we provided for our new loan. And the following output is the total interest expense over the life of the mortgage for our new loan. Next, we have the net cash out from or required for the refinancing. In this case, because our new mortgage amount is bigger than our existing mortgage balance plus our closing costs, we are able to take out $46,000 by refinancing. So this is money we can put in our pocket or the bank by refinancing. The next set of outputs compare our existing mortgage to our new mortgage and show the savings from refinancing. The biweekly mortgage payment savings or costs compares our existing mortgage payment to our new mortgage payment. In this case, we save $67 per biweekly payment by refinancing and lowering our interest rate. The next output shows the number of months to recover our non-recurring closing costs. This is calculated by dividing our non-recurring closing cost figure by our biweekly mortgage payment savings. Typically, you want to recover your non-recurring closing costs within 2.5 years of refinancing your mortgage. In this case, we recover a non-recurring closing costs in 23 months, so so slightly less than 2 years. The final output is total interest expense savings or cost over the life of our new mortgage as compared to our existing mortgage. So you can see that we save almost $35,000 in total interest expense by refinancing. It's important to highlight that you can change the calculator inputs without having to refresh the page. So, for example, if I change our new interest rate from 4.25% to 4% and click the calculate button, our outputs update automatically without having to refresh the page. And as you can see, our savings per biweekly payment increases and our months to recover our non-recurring closing costs decreases because we lower the interest rate for our new mortgage. After you have reviewed the calculator scenarios that apply to you, you can click on the Compare Lenders button at the bottom of the outputs and review a table with interest rates and fees for lenders in your area. If you are looking for refinance proposals, make sure that the Refinance option is selected on the top left of the page. If you have any questions about the free and clear biweekly refinance calculator or any other mortgage topic, you can always click on the Ask an Expert button at the top of any page and it will take you to the free and clear Ask a Mortgage Expert feature where you can submit your question. The feature is free to use and we never spam. We also encourage you to review the free and clear mortgage refinance guide that walks you through the refinance process step by step. Thank you for reviewing the freeandclear.com biweekly mortgage refinance calculator.